Welcome to Dissident Canada. My name is Tyler, and I have upgraded the audio by using a old headset. Good headset. Pretty good headset, anyways. So, someone mentioned that the audio was sounding a little bit low, so thought I'd try this out for a little while, see if it's gonna go well or not. There is no pop filter on this. I'm just recording on my phone, so there's no fancy software or anything or editing. It's just, raw, because I think editing and listening to my own voice for like an hour or more sounds like hell. But, anyways, the Loonie is once again strengthening, and some people are misreading this because, in relativistic terms, it appears that the Loonie is, increasing in value against the United States dollar. And that's kind of true, but not really. It's a little bit more complicated than that because, like, when you're comparing, if you're looking at the CAD USD trade or the USD CAD trade or any currency trade like that, you're not comparing like to like. Yes, you are comparing currency to currency, but each currency is kind of unique. Like right now, comparing the Loonie to the Swiss franc is not a like-to-like comparison because there's many different things going on there. Like the Swiss franc against the United States dollar is increasing not because the dollar is losing out to the Swiss franc. The Swiss franc has been for a very long time seen as a safe place to put your wealth. So when you get into a situation where the economy looks very shaky, let alone just a little bit shaky, the wealthy pile in, and that's why the Swiss franc is going up in a relativistic term. It's not winning a currency war, it's just fulfilling its place in the market, the niche place that it's been for a while. And by a while, I mean like a long time. Swiss banks have been known as safe havens for a very long time, even though that's kind of going away because of the European mindset. But like if you look at the Loonie and its appreciation, it's not really due to, investors or high worth and net individuals piling into Canadian banks and just sucking up all the money, the currency, and just hoarding it in a bank. That's not what's happening. This isn't the Swiss franc ideal. This isn't what you think of with currency. What you're seeing is massive debt destruction. Like it's debt-based monetary systems functioning the way they do. All right, and especially in a world where you have carry trades, like this is going to happen. Like if you pull up a chart of the Loonie CAD, or if you do CAD to the dollar, right, you can see a massive strengthening in periods where you wouldn't expect to see strengthening because of the weakness of the Canadian economy. Like on a relativistic term, again, like in the lead up to the GFC, from like let's say the end of the fallout of the 2001 dot-com bubble, all right? So like you go beginning of '04, it's just like a very good upward trend into, the end of '07 almost, and then you get a sharp decline into '09, and then it goes back up to 2011, and it stays, relatively high until a few months before Carney, and then it's just Carney becomes no, when does he comes in like 2014 or like end, yeah, the June in the 2014. So before Carney comes in, there's already a downward trend in the Loonie. And like this isn't happening because investors are piling in to the Loonie. This is not what's happening. Like the sharp decline is because Americans came in and did a carry trade. Kenny McElroy actually talks about that in the 2010s when it was like just around parity. He took his company and some investors, as a real estate guy, came to Canada where rates were slightly lower, got a loan in Canadian dollars, swapped loonies to dollars, and then was developing real estate as his business. But what that does is that it creates a whole bunch of loonies that are then dropped on the market. So now you have an increase of supply, value relatively comes down. That's a carry trade. I think there should be strict capital controls in place to prevent carry trades, but that's because I think the Canadian people, or any nation's people, really should have sovereignty over their own money. Shouldn't allow foreign nationals to come in and fuck you like that. Like, just no. But like that is an issue. So what you're seeing now, like, considering we really haven't had an unwind in the Loonie carry trade, like we saw a little bit of it in 2020 into 2021. Okay, little bit of it. All right. My speculation is that there's at least double the amount of money, or double the amount of loonies in the FX market, which is the currency market, than what the Bank of Canada talks about. And if you were to add them together, you'd get triple what you have now. So that would be about $15 trillion. And if that were to completely unwind now, I don't think that would triple the value of the Loonie, but I did say for the last several months when I've been talking, whenever carry trades come up and I talk about the Loonie, I'd say that the low end for an unwind would be like probably around 85 cents to the dollar, and on the high end, like closer to $1.50, probably $1.40, but like that's really what the math, the extremely complicated math in my head is going on. And when I say complicated, I mean like it's not complicated in the sense of it's a physics calculation, which can be incredibly complicated. It's not that. It's complicated because there's like 7 or 8 different variables that nobody really talks about, and there's really no data. Like, there's no good data on, for example, velocity, or at least to my standard of what you would need to calculate velocity, to get a good enough calculation of velocity of money, which is just how fast money's changing hands, which you would need for the demand portion of a calculation for value. So, but like, what I theorize is happening is you're having a slow unwind of the Loonie carry trade, which is, again, probably at least $10 trillion in terms of loonies. In dollars, that's what, 7 trillion, which really is small, but it could be much larger. So like, I'm just estimating based on the way the Loonie acts and the estimations of how much currency that the Bank of Canada estimates there are. Their numbers are completely wrong, but it's the best you really can get. So the theory of what I think is going on is you're having massive debt destruction, and we can see this in some data that's out there. You can see consumers are defaulting on credit cards, loans, mortgages, everything. Like just across the board, defaults are up. So we know we're in a debt-based monetary system. If the debt is being destroyed, which is what a default is, you have a drop in supply. But your relativistic demand is basically constant. Like the ratio stays relatively the same. It fluctuates because not every loan is leased out on with the same interest terms. So demand fluctuates a little bit. That's why I say relativistically. It's relatively the same amount of demand. So supply goes down, demand stays the same, price goes up. It's a really simple concept. It's not like rocket science or anything. It's just it's talking about things that people aren't taught about or think about in terms of debt-based monetary systems, because everybody's looking at the central bank and saying it's central bank policy, and not really. I mean, to a certain extent with interest rates it kind of is, because Bank of Canada sets their overnight rate, but the bond market really checks that. Like if right now the 1 month, 2 month, and 3 month was trading below the overnight interest rate that they've again paused at for say 2 or 3 Bank of Canada interest rate policy meetings, they would drop the rate. I mean, they're probably going to drop interest rates anyways, because that's kind of where we are in the economic cycle of back to zero. The question is how fast. But seeing as everybody's pretends that the Fed runs the entire global economy for some reason, it'll be based off what the Fed does, and I assume the Bank of Canada is in talks with the Fed when it comes to interest rate policies, because like you would just kind of do that. But anyways, if you look like the moves in the Loonie, does it kind of sort of correlate to moves in say the DXY? Yes, but it's more complicated than that, because like the DXY is a combination of like euro assets and currency, and like yen assets and currency. That's what it's based off of. So it doesn't give you a good valuation of what the dollar's relativistic value is against other currencies. Like it just gives you a number, and it's kind of against like the euro dollar system, but not really. And I don't know how you would get a better number. This is like the real question. But like when you say I should say that the dollar index is at 95, or what it's doing right now is holding at 96, which is at the bottom of this band that it's been in for a while, right? Of between 100 and like 95 and a half ish is like this band that it's been for like a year or so. Yeah, it's about a year. It's relatively steady in this band, and people are all like, oh, the dollar's losing value. Okay, but like on the DXY, the chart you're quoting, if you go to all time, still relatively high up there. Like it was lower in 08. Yeah, way lower in 08. Like you're talking 24 points lower in 08. Like saying the dollar is losing value when you're comparing it on the Dixie is just kind of nutty, because it's not tracking the value of the dollar. Like if you wanted to track the value of the dollar, I mean, in theory, you could do it against gold, but that's not quite right because gold's price fluctuates based on um, perception of need for security, so it's not really a good judge of value. Like, people think that gold just retains value, and it kind of does, sort of, except for all the years and decades where it just goes silent and is basically trading sideways because there's no massive fear of like a massive economic downturn. Like, it's a hedge against your wealth, not so much about inflation. So, um, I mean, you could measure it against goods and services. That might be a better idea. But then, like, you've got to create a complete mess of a chart of, like, well, how much it is for groceries would be one thing. And then compare that backwards, and you could see like to like, either a liter, or if you're thinking in terms of American, in a gallon of, say, milk, you compare that. You could do it with oil, but again, oil is a commodity itself, and its price fluctuates based on demand. So that's not also really a good thing. You don't want to do like a relativistic to a relativistic because you get a indeterminate, like, real value. You get a maybe a guess. Well, it's better than a guess, but anyways, like, what you are seeing in the Loonie, if I get back on topic, all right, it's not a good move. What this is showing is that there is currency destruction somewhere in the system. Now, you're not seeing it in the Bank of Canada's formerly E1 data, now just called the money aggregates, which, why would you change the name like that? Just so you're still seeing a slight increase from month to month on that data charts on when you specifically look at, like, I prefer to look at M2 gross just because it's the biggest number, which is where you get that 5 whatever trillion, which it's funny that M2 gross is bigger than M3 gross. Shouldn't it be the opposite? Anyways, so you're not seeing the debt destruction there. You could theoretically have massive amounts of debt destruction internally in Canada and still see rapid growth in the money supply. That would be interbank loans, but I'm not 100% on that. Convinced that would be where you would get this, but you would still get supply going up, so you wouldn't have that, and you're not seeing massive demand spikes for the Loonie. So it has to be external, which means it's likely the carry trade problem surfacing its head. And to me, it's really confirmed when you look at the dips and dives we've had over just like the last couple months. Like, if you look, you have a large ramp up in the middle of November, or a relatively large ramp up and then you get to the end of November and you get a very nice decline. Then December it starts going up again. Then end of December, end of year as well, you get a very steep decline. We get over that sharp spike. It looks like the end of month for January carried over into the first week of February, and you get that sell-off in currency. Those cycles match up to what happens with internet globally, business cycles of, end of month, I have to do XYZ, I need some money, so let's go get some money. Money starts flowing, price comes down. End of year, again, you've got to deal with a whole bunch of stuff, so you probably have to take out more cash, more money in all forms. Like it's not just, physical, but like digital, and it could be loan based. So like you get these swings with, what's happening in business, and then everything starts going normal. It normalizes, all right. And you're not seeing a continuation of credit creation, so you're seeing credit either maintaining or destruction. In my belief, destruction. So then you get the swings up. But then you get end of month and people need money again, so swing down. But it keeps swinging back up, or at least that's the trend it looks like we're doing. So, Loonie's crazy moves past couple months purely based on what's happening externally. There's and it's not political. It's not, oh look, the Loonie is strengthening, and because Donald Trump tried to destroy the world with his tariffs, and oh look at those currencies, they're kind of strengthening, and it's like, it's not really what's going on. Because sure, is it hurting businesses and trade, and that's affecting it? Yes, but trade is done through dollars. So, like, you could look, and if you wanted to go that way and say, oh, is Donald Trump having an effect on Canada? You can look at GDP, but that's a bad way to do that because GDP is an extremely dirty number. But you're also not factoring in then, like, oh, we've been in an economic downturn since 22, when the reflation was not seen as a slight reflation, but as pure inflation, and then everybody's coming to terms with, oh, the economy was not red hot. Oh, it's not currently red hot. Oh, it's currently not going to ever be red hot. Oh, like that's what you're seeing economically now. Is this slow realization of, oh, shite. So now, if you want my guess as to what could happen with the moves of the Loonie, I think it's going to continue oscillating like this, of trying to rev higher but then go down. I gave you my height. I would like to give you a time frame. I can't really do that. I'm basically thinking, though, my time frame of what the Loonie might end up looking like is, if you look on the Loonie USD trade and you go to all and you look at the GFC and then into the European sovereign debt crisis. So go 2005 to like 2014. I think the graph could look very similar to that. I think again, I thought it could spike higher. It really depends on how big of an unwind of the carry trade we get and how much internal credit destruction we get too. Like, if the government comes in, and I think there's a good chance of this, and Carney, comes in and not only bails out the banks, but bails out people on their mortgages, there's a lot of government policy that could screw with my estimation. It's why it's so large, the span of like 85 to say $1.40 to the that's a big gap. I would love to narrow it, but there's too many unknowns in government policy that could come about from not just Carney, but Trump himself. Although I totally suspect the United States to start doing bailouts sooner rather than later. But I think we're on a very similar trajectory into the GFC. Like, not just currency-wise, but economic fundamentals and like banking system fundamentals that nobody really is taught. Again, think of carry trades, monetary systems, how they work. Euro dollar nonsense. that like nobody talks about. Like, seeing as we're in a euro-dollar cycle, it could be another, say, super cycle where we get situations very close to what happened in the GFC, where money just really stops flowing and banks really don't do anything. So, could very well happen. Anyways, that's some basics of what's likely going on with the Loonie. You can also see this, by the way, if you care, with the yen. The yen is more important than, say, the Loonie, because the Japan is an extremely important part of the global financial system. Massive eurodollar hub. When the yen starts to strengthen and you're starting to see yields spike as well, you're probably going to see a lot of companies either default or pay off their yen debt, because the yen carry trade is the largest carry trade on Earth, bar none. So like, if you really start to see the yen spike, in value versus the dollar, say if you get into a sustained period of, say, 140 to 130, there's likely a jump to 120, and then just maybe even down to 100, or really higher. Okay. This isn't the dollar losing value. This is the yen appreciating, like the Loonie is, because of debt destruction. If you start to see stuff like that sustained, we are well into no bueno territory. All right. But like, if say you also get into a period where, say, the Dixie drops, and I mean like drops like a rock, goes down to that like more historic low of like 70s, that means dollars are relatively cheap. Again, it's a relativistic value, the Dixie, so it's still not great. But if it's relatively cheap, that's good for the world. Dollars cheap, economic things go, because the dollar is the reserve currency, no matter what the fucking government say. So its job as being the intermediary currency between everybody, it kind of needs to be the cheapest fucking thing on earth for that to work well. Or one of the reasons to do that. Like, the reason why the dollar will keep being king is because there's so much fucking dollar debt. And like, the network's already set up. Alright? For someone to dethrone it, you'd have to come in and do everything the dollar, the current system does, and then do it 2 to 4 times better to get adoption, which nobody does. So it doesn't really matter. Anyways, that's the video for today. Maybe I'll talk about the situation with the new bridge from Ontario to Michigan and relations with Donald Trump. But like, I talk about that with Canada so much last year. I'm so bored of it. Honestly, I'd rather talk about the possibility of an election, because that's kind of exciting. And by exciting, I mean I just kind of want to see the CPC conservatives fall flat on their face yet again, and then watch all the conservative shills just come out and be like, rah, 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 instead of like, oh wait, our party kind of sucks. I love that, and dunking on them, because the Conservative Party does suck. Let's be real. So do the Liberals, but like, when you're the opposition party and you don't oppose anything and can't get anything, you kind of suck. Anyways, have a good day. See you tomorrow with, I don't know, something.